You know why Aptos is up 15% today?
Because of that reply guy. That's hilarious.
It's so funny.
It's so funny. It's so funny.
There's just some random dude commenting on every
Aptos looking good here.
Aptos looking good here. It's actually going up.
This episode is brought to you by Kraken OTC. Get access to 24/7 trading services for high net worth individuals and institutional clients to execute orders over $100,000. You'll hear more about them later in the show.
All right. We're live, everybody. Got another episode of the 1000X podcast fired up here. I'm Jonah Van Borg here with your co-host, Avi Fellman. We've got a lot to talk about. Sentiment in crypto is pretty terrible. But before we get into the dire news out there, just a quick update. The 1000X podcast has its own feed now. It's pretty exciting. We graduated from the Empire feed. So if you want to make sure you to catch all the latest episodes that we put out on time, so that the news is relevant to you, type 1000X into your, wherever you consume your podcasts, YouTube, Spotify, Apple, and search for our feed, or click on the link in the show notes. So thanks again for listening. Avi, let's dive into it here. Everything except Bitcoin feels like it's going to zero. Is this going to continue, or is this a buying opportunity?
Great way to start off the pod. Honestly, I think, what we've been talking about this for a while. Basically, altcoins just got destroyed over the last 2 months. Really, even this month is when they got hit extremely hard relative to BTC, because BTC's kind of just gone sideways, and altcoins have bled out. But when I look at Bitcoin dominance and I see it at 61%, it's actually come off a little bit from the highs of last week. And I look at ETH BTC at 0.028. I look at every single alt down 90%. And my takeaway is that this is actually a really good time to buy stuff that you think is, has strong fundamentals, right? When you look at the market of 3 months ago or 4 months ago, you look at the charts. Basically everything was up in a straight line, and every single alt was up 300 to 500%. And you sort by top gainers on CoinGecko over the last month, and you're like, holy crap, like the lowest alt gain is like 100% here. That's normally the wrong time to go buy, but that's when everyone is talking about buying. And now I'm seeing green shoots. Forget BTC for a second, but things like Tau are actually doing very well because they launched an interesting product that people are trying to use. There are pockets of outperformance right now in the alt world. Broadly, they're still doing poorly, but the stuff that's actually making progress is doing well. And so I'm actually of the mindset that now is a really good time to go through your list and start allocating. I would be selling BTC to go buy alts here. I actually think that's probably a contrarian right now, but right move is, I'd be shorting BTC buying some alts.
That is a contrarian view. The way I usually like to look at it is never catch a falling knife in crypto, especially on a shitcoin, because even if something's sold off 80%, it can still sell off another 80% from there. None of these things, or a lot of these things, don't have any real fundamental value. Some of them do, but most don't. So, if you're like, wow, fart coins down 90%, maybe I should try to get involved here. It could easily go down another 90%, and you'd just be caught holding the bag. So I prefer, I lost a lot of money in my early crypto trading career trying to do that. Because that's sort of how you trade commodities. When prices get too low, supply gets cut and demand increases. So, things tend to revert to the mean a lot more sensibly than, maybe they would in crypto, where there's less supply curtailment at low prices. Like tokens still get minted with reckless abandon, whatever the price is. And demand doesn't necessarily pick up when prices are crashing. In fact, the opposite might be true in crypto because it's such a reflexive, fear and greed driven asset with no, it's not like you're putting it into factories to make cars. So I kind of had the wrong approach in the beginning and got burned. And now what I like to do is wait for tokens to bottom out and start rallying before I quote unquote dip buy. But I think what you just said about Tau resonates because just looking at the chart here, it's kind of stabilized and it seems like it's on the up and up again. So I guess what the only caveat I would add to your take is, if your projects that are on your shopping list that you like, obviously they're at better prices than they were a few weeks ago. If you want to start accumulating, make sure that the knife has stopped falling, right? Check to see if it's bottomed out. And if it's still falling like a stone, it might pay to wait for a little while, wait for it to bottom out, and then wait for it to start picking up before you get involved. I don't know. Is that what do you think of my approach?
I think it can be dangerous. I mean, the thing is in this particular state of the market, a lot of these bounces are short-lived, and because there's so many people that are trying to allocate to the good projects, they tend to sort of remove themselves from the pack. And so I'll give you an example. And maybe this isn't directly contradictory to your point, but just something that I've noticed is take Litecoin as an example. We were talking about Litecoin as an ETF trade for a while now. And I know a lot of people were saying, okay, well, the market doesn't look amazing right now, so I'm not going to go buy Litecoin because Litecoin is correlated to the market. And if I think the market's going lower, then I get to buy Litecoin lower. And then what ends up happening is that, okay, Bitcoin trades down 3%, and then Litecoin trades down 3%, and then Bitcoin bounces 1%, and Litecoin bounces 10%. And then suddenly, if you look at the chart over the last month, yes, Bitcoin is down, Litecoin's up 30%, right? And so if you're waiting for the market itself to start doing well again, you're kind of actually missing the opportunity. And by the time the market starts to do well again, all of that premium that coin is supposed to have might have already been baked into the price. And I'm kind of seeing that across a couple of different assets, including Tau. I mean, Tau is back. A ton of alts are just still at the lows, and Tau is back to where it was, a month ago with Bitcoin at 102K, even though Bitcoin's 96.
So let me ask you this question then. Follow-up question to what you just said. I totally hear you, and I'm not necessarily convinced about my waiting for it to bottom out and then buying the rally theories. I'm kind of testing it out with you. You said you like selling Bitcoin to buy alts. Tau is where it was a month ago. Litecoin is on the highs of the year, or basically the multi-year highs.
This episode is sponsored by Kraken OTC. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. Hey everyone, Jason here. There's a reason why Ledger is trusted to secure more than 20% of the world's crypto assets today. Check out their newest devices, the Ledger Stacks and the Ledger Flex, featuring the world's first secure touchscreens. Take your security seriously. Hit the link in the show notes of today's episode to check out their latest devices. Trust me, you won't regret it.
Do you like selling Bitcoin here to buy Litecoin on multi-year highs? Do you like selling it to buy Tau trading where it was a month ago?
It's a good, when you frame it that way, I actually do think that the Litecoin trade is kind of played out at this point. I wouldn't be a huge buyer of LTC. I just don't think, I think a lot of the premium in that trade has been juiced. So I'm not as confident in the LTC trade. But like, for example, if you're thinking of, okay, I want to get an allocation to AI coins, and I think AI coins are going to do well, like, how should I start to allocate? Well, one way you can think of doing that is going and buying the stuff that you like and shorting some BTC against it, because I do think that at this point, like, that's actually a reasonable pair trade. I know that sounds nuts.
Yeah, no, it doesn't sound
because for the last like 6 months, it's been completely nuts to even think about doing that.
No, it's not nuts.
I actually think that a lot of these coins are beaten down so much at this point that it might make sense. One thing that I will say is we were kind of right. Just to do a little lap, not that we could have made any money on this, but remember when we talked about AI coins and we said the composition, the market cap of AI coins might grow substantially, but the composition is going to change dramatically. Well, if you go look at just AI coins in general, the darling Virtuals has done so like horrifically bad, and now people don't even buy it for a bounce anymore. Like it hit $1, and then Bitcoin bounced 4%, and then Virtuals didn't even move. There are so many people selling it. But you know, it did move. ARK had a 40% move off the lows, because that's where the mindshare is now, because they're doing apparently a better job according to the market of delivering the product that people want to use. And by all accounts, it actually is quite good. But I think this is just a cautionary tale to people that get wedded to their bags in an up and coming sector. You always have to be willing to realize that whatever coin you've chosen in the moment can be disrupted in a week, and that you need to move around.
You got to be in and out of stuff,
or at least have like an index and just buy the new stuff and put it in your index, because I guarantee you, like whatever you buy today in the AI world is probably going to be obsolete in like 2 months. That's
it's
just
so
the way
hard. It's so hard to trade like that. Like, people aren't wired to, I mean, churning through different tokens and buying and selling stuff quickly is usually a recipe for retail traders to chop themselves up and really end up in a hole, right? You pay transaction costs. All of this trading is on chain. These things are illiquid. It's not necessarily clear how much bid offer you're paying at all times. Like, it's dicey stuff to trade actively, and especially in like the illiquid alt space, or an emerging pocket of the alt space like AI coins are. But you have to. If you hold on to stuff, you will just get carted out on a stretcher. And, you know, like, you and I got started with Virtuals. We realized pretty quickly, building our agent, that a no-code agent platform sucks, right? Like, the content that a no-code agent puts out is terrible. It's spam. Like, people block it. It gets like 2 views per tweet. It's terrible. So then we switched to the ELIZA framework, ELIZA, whatever, to build our own. Basically, the ELIZA framework is like a repository in GitHub that allows you to do more custom stuff with your bot. We switched to that. That has a token. You know, I bought that on the highs, mea culpa. We all screw some of these trades up. You know, it was good at first, but then that very quickly became obsolete, and we scrapped that, and now we have a completely custom stack. And, you know, what I should have done over the course of that time is realized, like, okay, I got to sell Virtuals on any pop, realizing that the no code framework is garbage and this is going to lose mind share. AI16Z ripped hard. Should have sold that when I realized that it too wasn't good enough. I just held on too long. And so
I think it's hard, right? It's hard to do that. It's hard to move around, like you said. I mean, if you buy something and you're like, okay, well, I'm really confident on this AI theme. I'm really confident that people are going to be using agents. I'm super confident that this is a sector that's going to grow. And then you allocate to Virtuals because it was the leader, not even 2 months ago, right? I mean, it was like
the clear leader. Yeah.
Like the clear leader, like 2 months ago. If you did something like that in the traditional stock market, like in an analogous framework, You found an industry that you think is going to blow up. You found the leader. Very rarely are you going to be disrupted in 2 months. It's just not going to happen.
Yeah.
And so, people just aren't, they're not wired for this, but you kind of have to be in crypto.
Because these tokens aren't delivering.
Like consistently evaluate, which is why it's so easy to lose money, because the most dangerous thing that you can do as a trader is to marry your bags. And I think it's very easy to do that in crypto because there are two psychological phenomena that happen. One is you buy something and it's the leader and it does really well for you, and then it goes against you, and suddenly you're in a position where, okay, you've lost money on this thing, but psychologically you don't want to give up on it because you've lost money and you want to make back that money, and you end up just holding in the hopes that it will go back up, not admitting to yourself that it's been disrupted. And we see this play out over and over and over again. It's like the lack of ability to admit that your project is no longer the good project. I mean, there's something you just have to really fight against.
Well, it's true. And one other thing that makes it even harder, two things. The first is crypto is a very tribal asset class. So if you're like a virtuals holder, your tribe on crypto Twitter, like you're going to see their content. Everybody's going to be, helping each other feel good about bag holding, even when bag holding is a terrible idea. So the tribalism, that communal sort, that sense of community kind of keeps people in positions longer than they should be. It psychs them out. It creates like little kind of psychological bubbles of groupthink that screw up your trading process. And then the second thing that happens is projects are aware when they're losing mind share. They're aware that their token prices are going down. They have stakeholders and employees and devs who want the token, who want the number to go up too. So what they do is they release on their roadmap like things that will make the token price rally, news, changes in tokenomics, buybacks, buy and burn, all this stuff. So they'll basically attempt to psych you out of selling when you should be selling. And that too is a bad idea, because at the end of the day, none of these projects are legally allowed to deliver, earnings per share to their token holders, right? So unlike that stock market analogy that you just drew, it's really about, it's not about, when you mentioned like tokens or projects getting disrupted, their core product isn't necessarily getting disrupted. It's just the probability of future mindshare increasing is getting disrupted by mindshare. And mindshare is a much more fluid, transient, evanescent thing than like actual underlying business viability. So that's why these shifts happen so quickly. And, like me, we could sit here all day and pretend to always be right about everything. That would be dishonest. Like I've lost some money on AI coins. I think it's good to just take some losses, to just like, obviously it's not a huge part of my portfolio. I can pat myself on the back for being mostly in Bitcoin, but for the little piece of it that I try to like learn with and gamble on crap like this, I've definitely lost some money. So I think it's time, rather than just like clinging to this idea, marrying my bags, as you would phrase it, I think it's best to just like sell most of those positions and move on to the next thing. And the next thing, right now, there are a lot of next things. Like there are a lot of tokens like Tau that have been heavily beaten up that could rally. Also, there are a lot of like, it also pays to try and bet on things with more convexity, where like, the market cap is so low that you don't have to risk a ton of money to reap a huge reward. Like you can bet on really early stage projects or projects with a clear, debottlenecking narrative like Litecoin, even though, you wouldn't recommend doing that. So there are all sorts of other opportunities. If you're married to your bags, the biggest disservice you do to yourself is not the money you lose, but the future, like the forward opportunities that you sacrifice by not having that capital freed up to capture new opportunities.
I mean, a big issue, just going back to the core problem of things get disrupted too quickly, it's that everything is open source, right? And so it's extremely easy. If somebody makes a huge innovative leap in crypto everyone else can see and immediately understand how they made that huge innovative leap and then incorporate it and then compete with it. I mean, the way to think about it is like they're constantly the 4-minute mile is being broken in crypto in that sense, right? I mean, for the longest time, nobody ran a mile in under 4 minutes. And then the moment one person does it, in the next 10 years, like hundreds of people did it because it was just a psychological thing. And so a lot of these breakthroughs or things that you build in crypto or new products that you build, forget breakthrough, just you build a new product, you build an AI agent platform, and then everyone can see, oh, okay, I understand this is a useful product, but I can build it better, faster. And there's no moat because you can see how it's built. So I think that's, both really incredible because you get extremely fast iteration on products in crypto, which is awesome. But it makes the life of a team extremely hard. And I do think that it's why all of the, I'm trying to figure out the right way to say this, but basically the incentives are for a founder to go build an L1, specifically because it's harder to disrupt an L1. Because what you're doing is you're basically accumulating a community of applications, and regardless of what applications are built, you win if you can convince people to build on your platform. And then if you build an application, you're kind of stuck because it's much more competitive. So I think, and also the valuations for L1s are much higher. So I think that it's just like also disincentivizes building applications. But the people that do build applications, they get to live in a very competitive and fun world.
Yeah, fun with big air quotes around it. I mean, that's a great transition into the topic of L1s. Solana's taking a lot of heat right now because the meme coin / crime coin frenzy hasn't necessarily been constructive for society's view of crypto. But before we get to that,
this has been really bad. Have you talked to anyone about Trump coin or any of these memes? Like anyone like not crypto in the real world? Like it's horrendous.
People in the real world stopped talking to me about crypto when prices came off the highs. For a while, it was like, what should I buy? Jonah, you're the crypto guy. What do I do here with my bags? But yeah, now that prices are nuking and Bitcoin is off the highs, like I've stopped having those conversations. Maybe you've got a different friend group though. Tell me.
I mean, it's just, like it pops up in politics now, right? That's what I'm trying to say. Is that I've had quite a few people talk to me and complain about this Trump coin and how much of a massive grift it is, and these are Republicans. That aren't in crypto. They're like, dude, what is it? Like, what is this scam that he's launched? How did he? And just Javier Milei thing has turned into a Category 5 hurricane in his home country of Argentina. I don't know if you've been paying attention to the news there, but he's getting lambasted, and it's really sad because I actually think that if world leaders had embraced crypto from a building perspective or from an incentives perspective, that would have been really cool. Like imagine if Elon had said, hey, we're going to open source all of this government spending data, and we're going to launch a coin that's going to get 1% of all of the dollars saved. Go buy this coin and then dig through the data and try to save us money. And he's created like a mass army of people incentivized to dig through government data because they own this coin. I mean, like even something it doesn't have to be that big. It could have been a lot smaller, but something more interesting would have been awesome.
That is a brilliant idea. I mean, he did, I really like that. Like, I hope somebody who knows him hears that suggestion. I think it's brilliant. That's exactly the right way to incentivize people to help grow a project that's worthwhile, like cutting waste. And he did suggest putting all of crypto on chain, all of the treasury spending on chain, so that everybody could sleuth through it and see where the money goes. Which, with the exception of maybe some confidential like military defense projects, is probably a worthwhile experiment. But yeah, I agree. Like, why I don't understand why these politicians fell for scam coining. It doesn't. Actually, let's not call it scam coins. Meme coins are what they are, right? I think if you buy Dogwhiff Hat or Popcat or Mog or Bunk, you're expecting the team to deliver real value to you. Like, the joke is on you. These are just memes. Like, don't think any deeper than that. I feel like it's sad that politicians have sunk to the level of memeing instead of actually like suggesting real policy or using blockchain for its actual merits, which is, creating trustless, decentralized databases, which are effectively more trustworthy and transparent than the sort of closed source monolithic things that and often more technologically up to date than the closed source monolithic things the government uses. Like, I would call myself a libertarian in that sense, and I think they could have embraced that. So this is a sad turn of events. But Trump and Milei have done some interesting things, some good things, and they can always pivot back to that later. I think like the take that's bothering me right now related to those tokens isn't that the world leaders who have engaged in that conduct have disgraced themselves, because they'll bounce back. It's more like, what does it mean for crypto? What does it mean for Solana? Because all this is taking place on Solana. There's a an increasingly consensus viewpoint out there that it's bad for Solana. I have the opposite take. I think this is all
it's not bad for Solana. I mean, the bad part is just that they're clearly, these people are surrounded by value extractors. I mean, at the end of the day, there's nothing you can really do about that, because Trump, Milei, Dave Portnoy, all these guys, they don't have any knowledge of crypto. They don't have any ability to navigate crypto. So they rely on quote unquote trusted advisors. And in crypto, it's just so easy, if you have that kind of reach, to make so much money. It's like you need like an extremely morally upstanding person to not take advantage of that.
I guess that's a metaphor for broader government, right? Like, a lot of governments like that. I never want to do that, but
but it's I think you put 100 people in that situation, 99 of them are taking some money for themselves, and a lot of it, right? And so it's kind of can't really. It's hard to solve that problem, to be completely honest. I think what could have been done is they could have been pushed in a better direction. And these people, I think, if out of the 100 are actually like bottom 5% of humanity, they're pretty bad. They're like pretty egregious scammers.
Avi, what are you saying? Are you saying that people in government do things for their own personal gain?
No. Definitely Trump. Trump would never do that.
No.
Trump, no. He's different than all the other politicians. Don't worry, guys.
In that sense, I think these meme coins have just exposed the broader grift going on in government. Like, what's the difference between Trump's crypto advisor, like pumping and dumping Melania tokens, and Elizabeth Warren, like taking money from Pfizer and then like, lobbying for their vaccine? I don't know. To me, it just seems like,
in some ways, Jonah, this activity, it humanizes these politicians.
Yeah.
Like, think about if the president of the United States can do something that dumb and that grifty and that bad, like, he's no different than you or you and I. Like, none of these politicians are any different than you and I, and the way that our world acts around us. You ever see? I mean, like, you ever go to a parking lot in New York? When you park, and then you give the guy your keys, and he has to park the car for you, because these parking lots are really, really complicated. And then you come back and you get your car, and there are 3 people in front of you. So you go to the guy and you slip him a 20 and you say, "Can you get my car first?"
Like, yeah, that's like, just how society works. Yeah,
that's just how society works.
It's funny.
And politicians are no different.
It used to be in New York that you could grease any bouncer and get in pretty much wherever you wanted. I don't know if it's still that way, because I'm out of that game now and have been for a decade plus.
No, it's not untrue.
But in Europe, they're much more principled about it. Like in Paris, if you try to pay the bouncer 500 euros to get into like the nicest nightclub in Paris, he'll just be like, "I don't care if it's your birthday. I don't like your face. You try this at Berghain, you'll just get sent home," right? Like, the Europeans are much more principled about this stuff. In America, it's just
The hardest club to get into that I failed to get into was an empty club in Belgrade, Serbia.
I've been clubbing there. Which one?
And-
the Tube?
And it was, I looked at, you could see inside, there were like 6 people in there. And there were these 2 massive, like 6'8", Serbians are huge, by the way, two massive guys. And we try to get in and they just go, nope, not today. I'm like, why not today? They're like, nope, not
I know
today.
why you didn't get in there, because you're not a Serb and you weren't in a group with a Serb. You
Yeah.
got to go with Serbs. I went with Serbs, so I got in everywhere.
Yeah. You know what? I should have. I should have gone with the Serb. That was my huge mistake.
Yeah. Crypto tip of the day: if you want to get into a nightclub in Belgrade, bring along a Serb. If you want to get into a nightclub in New York, or if you want to make money in America,
bring $200.
bring $200.
If you want to get into a nightclub in Paris, don't.
Yeah, just stay away from Paris altogether. You wait in line like the rest of them.
This episode is brought to you by Kraken OTC, one of crypto's longest running exchanges with over a decade of experience. With Kraken OTC, high net worth individuals and institutional clients get white glove 24/7 trading services for orders over $100,000. You can trade over chat or even access Kraken's self-service automated trading feature to receive executable quotes in seconds. With access to Kraken's fully personalized service, you can guarantee a secure trading experience with deep liquidity and competitive execution. To get in touch, click the link in the show notes or head on over to kraken.com/blockworks. Availability of products may vary by jurisdiction. See legal disclosures for each jurisdiction at kraken.com/legal/disclosures. Crypto trading involves risk of loss and is offered to customers through Payward Interactive. Earlier in today's episode, I mentioned Ledger's latest products, the Stacks and Flex, and I wanted to take a few seconds to tell you more about them. These wallets feature the world's first secure touchscreens, which don't just simplify your digital transactions, but also keep them extremely safe. These wallets are virtually impenetrable to online attacks because they store your private key in a secure offline chip. You can manage more than 5,500 tokens and install up to 100 apps. Choose the most trusted name in hardware wallets and take control of your digital security today at ledger.com or hit the link in the description of today's episode to check out their latest wallets.
Just bringing it back to crypto for a second. I think that the Fat Protocol Thesis is alive and well. I think that, like you said, applications are not going to retain any value until like sweeping regulation allows revenues of applications to get passed through to token holders, and then maybe the Fat Protocol Thesis gets turned upside down. But between now and then, like all of the value is going to accrue to L1s that matter. And right now, those L1s are Bitcoin and Solana. Maybe ETH has a play in the future, but even if this meme coin frenzy dies down, I think builders who are trying to build high throughput applications are going to look at Solana and be like, wow, Solana survived the meme coin frenzy without getting bowled over even once. And this is a far cry from the days when Solana got bowled over by a walking app back in 2022-23. So like Solana's really battle tested itself at this point for high throughput applications. There's no like bridging between an L1 or an L2. It's all there. I think the story for Solana looks good, so I'm dip buying. I'm nibbling a little bit at, I nibbled in the 160s and I'm nibbling still at 170. Taking proceeds from
the biggest worry about Solana is just purely the fact that there's 1.6 billion coming in terms of unlocks, and I think a lot of it is not hedged, and the price was around $60 where people bought it, so they're up a ton. But once that supply is cleared, I think that it's backed up only for Solana. I mean, they've just been such a clear winner, and all of this nonsense is going to blow over. And when I say nonsense, I mean all this worry about these insiders. I mean, Solana didn't do anything. I mean, it's not Solana's fault that they were such an amazing chain that people decided to go build on it, and all of the activity happened on it, and then that activity happened to include Grift. I mean, like, if Solana sucked, then the Grift would have just happened on a different chain, right? I mean,
yeah.
Solana, I mean, it's not like,
Anatoly and Raj were standing up there grifting themselves. It just so happened that it was a great chain to do grift on because it's a great chain.
Yeah, exactly. And also just grift is a feature of any new technology, right? Even PayPal, grift was a big problem they had to solve for in the beginning. Honestly, though, I don't think, you should read 0 to 1. It's a great like book in general, but there's some chapters in there on early PayPal and how the fraudsters were just all over it. I think that, honestly, I still don't think that meme coins are grift. I think that people should go into these, you can call them investments, but go into these trades with their eyes wide open. How on earth, there's no SEC registration required to launch a shitcoin. Trump, Libra, like these things are all shitcoins. Why would you ever feel grifted if you bought the highs on whiff and it just went straight down because the guys on Twitter who were saying it was going to be on the
because
sphere were
look,
wrong?
that was, you were lied to. You were told that the dog would go on the sphere, and the dog did not go on the sphere.
You were lied to by Anons on X. You weren't lied to by like the CFO of a publicly traded company who has like actual fiduciary obligations to you. What am I missing? It's not really grift. It's like you're at the casino, you double down on like you're at the blackjack table, you've got 19, you're supposed to stay, you double down, you go bust, and then you complain that you got grifted by the dealer, and the dealer probably is going to look at you like you're an extraterrestrial, right? That's sort of how these meme coins go. Like you're buying Trump tokens at $70 billion, hoping for what? $700 billion? Are you hoping for Trump coin to subsume the global economy? No, right? I don't know, man. To me, it's just, I think it's unfair to call these things grift. It's just, they are what they are,
Yeah, I do think that meme coins are going to evolve over time. I mean, you can kind of, right now, obviously, meme coins do nothing. I think in the future, people are going to try to tie some level of value to these meme coins. And one thing that I'm really excited for us specifically is kind of taking this 1000X token that we built and actually turning it into like our own personal creator. I think the term is like a creator coin.
I like that too.
It becomes a way to track our careers and our success in addition to also being an awesome AI agent. You can sort of bundle up all of these sources of values in a coin, and it's super valuable to us as well, just because we have the community that's built around it, that's engaged with us. Like that chat pops off, the 1000X agent chat.
Go check it out.
It's filled with like pretty high quality people.
Also, our coin is trading at $3 million. It's not trading at $70 billion. So in terms of just your risk reward equation is entirely different.
Yeah, that's true. We should probably stop shilling our coin.
Yeah. Another thing about our coin, we've said 1,000 times, do not buy this thing with any expectation of profit. This is a science experiment. There's no misconceptions here. Definitely don't buy this coin if you want to make money. It's not for you if that's what you're all about.
Stay away if you want to make money.
Yeah.
But I think like the broader point, I mean, whether you buy it or not, it doesn't really matter. I apologize. I apologize for that little shill fest. It was really the point that I was trying to make is that I think more stuff like that is going to start coming out, and we had a little bit of it in 2021, but I don't think the tooling was there to really make it good. And today, it's so much easier to create a coin and tie it to your activities and create a community around that coin. I think that that's kind of inevitable. We had, we had the friend tech, we had the BitCloud. I mean, these things didn't really work, and I think it was because it was too commoditized. And you had to be on a specific platform in order for the value to be assigned to you. And what's changed is that now, because you can launch a coin kind of anywhere, you're not tied into providing value on a specific platform, and you don't need to create new behavior, right? You don't need to switch your habits in order to have a coin have value. I think that's coming, and that's actually going to be a really interesting area, and I'm trying to invest in it right now.
That is a really interesting point you bring up about being locked into a certain platform or ecosystem in order to have a social token out there that's tradable and liquid. And I never thought about it that way until you brought it up just now, but it is kind of a great take that, let's take it to the extreme. Let's say that like Meta um, allows, they would never do this, but let's say that Meta announced they were going to allow anybody on any of their family of applications to launch a decentralized social token that's not locked into that application, that can be bought and sold on Binance or on chain, transferred from any jurisdiction to any other jurisdiction. And even if Meta were to go bankrupt and WhatsApp, Facebook, and Instagram all die and go away, that token is still live, liquid, and trading. And you could link that token to the number of likes that you get on your posts, the number of followers that you have on some particular platform. Like, I think that would blow up. I think people would love it. I think there is a desire out there for fans and creators to be linked via tokens, and it just hasn't. The process has been too clunky. The user experience, like many things in crypto, has been too flawed. So if you think of any good ways to invest in that, maybe that's an area that we should be looking at, where we can get some early stage bags rather than buying the fastest horse in a leading category with a multi-billion-dollar valuation and watching it trade down 90% on absolute vapor. So yeah, maybe that's the takeaway from this whole AI parabola that we just witnessed. But to be fair, I do expect AI to recover. I still think AI mania is coming. It just, the iteration will be possibly different than the iteration that just traded up and down.
What's awesome? Have you used Deep Research yet?
Yeah, I'm a subscriber. I love it. I'm using it to learn about a business I want to launch out here in California.
It's insanely good. I mean, like truly amazing. I was trying to figure out how to invest most efficiently in the Chinese stock market, and I mean, obviously there are like some pretty simple ETFs that you can allocate to, but I wanted a broad view of the market, like the drivers, and it's like the top companies and the top industries, and their collect their revenues and their balance sheets and put it all in one place. And I asked ChatGPT to do it, and it did it in 8 minutes, and it produced a comprehensive report that I would have like expected to get from a bank. Obviously,
or McKinsey,
or like McKinsey in 8 minutes. It was insane.
What's so great about? Sorry, go ahead. I didn't mean to interrupt you.
I was going to say, and this is coming to crypto. One of the issues is data availability, and like where is it going to be sourcing the data from? But this is coming to crypto. It's kind of what we're working on.
Yeah, we're basically building Deep Research Lite for crypto trading, and hopefully other forms of trading too. I am super. By the way, our dev is about to ship a new update to our product, which is going to be a little bit more, basically allow the bot to have more context on what comes in and out, and decide what's most relevant, and pick and choose, and provide summaries of market activity and podcasts, be a little bit better with correlations and consistency of market views. So I'm excited about that. But back to Deep Research, I think that the overall Deep Research meta is good for crypto traders like you and me, and like our listeners. Anybody listening out there, this is good for you. And I'll tell you exactly why. The pendulum is shifting from sort of like analyzers to doers, right? When I was sort of like 20 years ago, when I was in college, the hottest careers were like working at McKinsey and Bain and BCG, and like thinking for other people who would do, because the doers were considered kind of like functionaries, and the thinkers were, the academicians were kind of like the big brains, the people that had the big vision, and they were rare. Now, anybody can kind of develop a really elaborate, well-researched, well-informed vision with 8 minutes of computation on OpenAI's platform. And anybody who's out there in the trenches experimenting with stuff, like crypto traders by definition are, right? Like if you're listening to this podcast, you're a risk taker. You're trying to better yourself and your situation by taking risk and doing your own thing rather than just like, becoming a wage earner as your goal. This whole trend benefits you. This whole trend commoditizes the analysis paralysis that so many, let's call them thought middlemen have profited from for decades now. And it just serves it up to you on a silver platter. So, whereas it used to be difficult for traders like you and me to get smart on fundamentals, now it's extremely easy. And so the role of the fundamental analyst is becoming commoditized across all industries, not just trading. And deep research isn't perfect. In my experience, as I'm doing research for my own personal investing and entrepreneurial activity, it kind of like I noticed that it hallucinates sometimes in pretty significant ways. So you can't just take it all at face value. Much like you can't take advice on a trading podcast at face value. None of this is financial advice, but like it does synthesize the fire hose of information out there much more efficiently than anything that's been seen in human history before it.
I think the hallucination part is just is a bit overblown, not because it doesn't happen. It absolutely does happen, but because when in the past you would just have to look at multiple sources and cross-reference and double check anyway, right? I mean, you could never take one source as a Bible of truth in the first place. So obviously you should be double checking numbers, right? And making sure things are true. The real benefit is having it all collected and put in one place so efficiently and so cleanly and so quickly with a reasonably high accuracy rate, right? It's not 100%, but that's okay for now. I'm super excited to start. I haven't really started using it in crypto yet. I'm pretty psyched to start because I mean, look, this world becomes more competitive every single day, and you need to stay on top of these tools if you want to remain competitive.
Yeah, I mean, you don't need to have deep research do anything for you if you just want to hold on for dear life and have Bitcoin in your portfolio. But I think if you want to understand the inner workings of these chains and which try to like forecast which tech might take off and why, it would help. Yeah, I guess speaking of which, going back to L1s, no amount of research is going to convince me that we need more than a couple L1s at this point. I wanted to talk to you about this though. Like I know our friends at Empire, Santiago just launched basically an L1 for his private equity fund. I know that other, Hyperliquid launched their own L1 instead of doing everything on Solana, which they probably could have. Do you think we're going to enter a world of app chains like what Cosmos forecasted way back when, where every chain or every application has its own L1? Or do you think we're going to end up in a world with like a couple of big L1s and the rest is just useless?
I mean, the app chain thing is nonsense, Joe. I feel like we've discussed this. Nobody has solved the issue of seamless integration, right? There is no seamless integration between app chains. No, and for some reason nobody has solved that yet. And maybe one day, if it gets solved, it can take off. But I mean, I think one thing that you don't hear anything about these days, you just do not hear anything about it, is decentralization. In 2020, 2021, I mean, back in 2017, this is what all anybody could talk about. Every project was like, what's so interesting, actually, now that I think about it, is what people used to get mad about and what they get mad about today. So people used to get mad about is when projects were not sufficiently decentralized. What people get mad about today is whether or not the tokens are, they're sufficiently given to the community, whether there are enough tokens given to the community, right? But nobody cares about decentralization anymore, because at the end of the day, this is seamless tech, and it works. And the ability to move value around it's just so much easier with crypto, regardless of whether it's decentralized or not. Nobody cares about decentralization anymore. And the whole app chain thesis, I think, is built around decentralization because it's
a way to scale effectively while still being plausibly decentralized. When you have a high throughput chain, like Solana, the big attacks on it were that it wasn't sufficiently decentralized. Those attacks are gone. Nobody attacks chains for not being sufficiently decentralized anymore. I mean, otherwise they would attack Hyperliquid, which is not decentralized at all in any meaningful way. Nobody does that, right? And so I think that because we've lost that as like a guiding star in crypto, which I don't necessarily think is a bad thing. I think that there was probably too much emphasis placed on decentralization back then relative to just the fact that the tech was better. Because back then crypto was staffed exclusively by libertarians. Today it's not. So I don't think it's necessarily a bad thing, but it also destroys the app chain thesis and makes me super bullish on high throughput L1s.
All high throughput L1s or just like a couple of them? Because there are a bunch now.
Yeah, I mean, high throughput L1s relative to app chains. I mean, like you can.
I see what you mean.
Right, like you can. Cosmos is done. I mean, nobody talks about it. Polkadot's done. Like I think the L2s are done. Like I think Arbitrum and Optimism are done. Personally, like I would short a basket of those versus long a basket of high throughput L1s. Actually, like even Aptos Aptos is up 15% today. You know why Aptos is up 15% today?
Because of that reply guy. That's hilarious.
It's so funny.
It's so funny. It's so funny.
Just some random dude commenting on every
Aptos looking good here.
Aptos looking good here. It's actually going up.
I mean, by the way, having built a reply guy with our bot, it's pretty hard to do that. Like either this guy is just sitting there like just taking Celsius to the face all day and all night, never sleeping, and just manually replying to everything, or he's paying Twitter like a decent chunk of money. Like he's paying Twitter probably thousands of dollars a month to have the bot reply to literally every single account, every single post. Aptos looking good here. But yeah, I guess getting back to the main point, I think an app chain in and of itself is not decentralized. It's obviously run by the team that manages the application. So each app chain isn't that decentralized. A constellation of app chains is in theory decentralized, but interoperability hasn't been solved, like you said. So I don't think we're going that route. I think that people don't care anymore about decentralization because there haven't been any major chain rugs. I think that once you start to put a lot of financial infrastructure and a lot of TVL onto a chain, then decentralization matters because nobody wants to trust a bunch of hundreds of billions of dollars worth of assets. So when you're just dicking around on Hyperliquid, in theory, you don't care if the Hyperliquid team controls the chain. But if you're like an institutional player, you're probably not going to stake LP capital in any kind of size on a chain that's centralized. That's my take.
Yeah, I mean. Yeah, I think that's a reasonable take. But I also do think that unless it's literally there's no plausible decentralization. I mean, like with Hyperliquid, you have a few validators, right? Obviously, they conclude, but you just kind of are betting that they won't, but that's plausible enough to get people comfortable with it, right?
People will be comfortable with it until they get rugged. Right. So basically my theory on decentralization is that no one will care for a while as, more and more of the world moves on to, on chain, which I still think is going to happen. Still very bullish this space. And then I think once a lot of the world is on chain and the rugs start to happen for, as you discussed, the 100 people in the room, how many of them would do something scammy test earlier in the podcast? Like I'm sure as more value goes on chain, that threshold will be reached where, closed centralized ecosystems will face an increasing cacophony of voices in the room hollering to rug the project and walk away with hundreds of millions of dollars and a nice villa in Ibiza. Like I think it's going to happen, right? So as more of the world moves on chain, these rugs will occur on centralized ecosystems, and then decentralization will become a topic, but not until that point. So let the buyer beware, basically.
I mean, it'd be kind of fun to have one of these chains blow up.
Yeah.
It'd be an interesting, good trading opportunity. I guess Rune kind of blew up.
Rune blew up.
But
We haven't had a good chain blow up since Luna. You know?
Yeah. I think we're overdue. All right, Jonah. I think we'll leave it at that. I'll look forward to the next chain blow up and the next podcast with you.
Yeah. Talk about it then. Until that point, stay sane out there, everybody. None of this is financial advice. Hang tough. The vibes are bad, but the future is bright. Good talking to you, Avi.
Adios.